The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Wednesday morning. And looking at oil, let's just get right into it. Here we go. 5104. We talked about that, and that has been breached. And by the way, it's been breached and kind of gone back and retested. That's pretty powerful in the near term. All right. And just to look at, this is crude oil and this is the March contract. And let me make sure this is still the front contract because I know we're getting close. Yes. If anybody knows different, let me know. But we're looking at March, and this is what I feel is what we need to be looking at. 5104. All right. So, what do we do now? So we caught some good moves, especially in the XLE on the way up. We talked, in fact, yesterday about the crude oil situation may not be over on the upside, but again, we always like to lose a little, make a lot, as we always talk about that. And 5104 was kind of Custer's last stance for the longs there and for me. And as we had this action happen already this morning, it's time to sit tight. In my opinion, and the way to get back into this is to have a close above 5104 if that's going to be the case. We talked a little bit about some fundamental news involving this and my feelings about hearing that every hedge fund on the planet seemingly is getting super short oil products right now. And that coupled with, us kind of sitting on the launching pad seemingly and trading above profiles was, a good enough proposition to try to take some more long shots here. And we talked about that range up there, but now all bets are off, and I hate to keep talking about the same thing over and over again, but we looked, there's a lot of reasons we looked at it this way, and that divergence on the bottom. And for right now, it's kind of a sit tight situation, and 5104 is your magic number. Not a big fan of shorting this. Here's our weekly, even though we have had a new profile appear down here this week. You've got, again, a really good situation again down at 45.17. Let me just pull this back up in 44.65, 40. Ouch, 40. Let's just call it 45 neighborhood is bottom support on this. But again, if we get down that low, we're going to have to take a look at some more indicators because things on the lows want to go lower, and I'm not a big fan of those triple bottom, double bottom, all those kind of classical technical analysis patterns. I think a lot of times they, let's just think about it. The same people, quite a few people see the same thing, put it that way. And a lot of times, as soon as you notice the pattern, they change it. So I'm a big fan of trading profiles. And if everybody sees the same pattern, a lot of times it will flush them out of those historically traditional technical analysis setups. So again, we'll take a look at it again when we're at 45 and see if it's worth taking a shot or not if we go down that low. But if we have some breakouts above 5104, and I think I've said the same thing 10 times already, we'll take a look at that from the long side again. But right now it's kind of a no trade. Here's a 240 situation. If you must be in the crude oil market, you're obviously noticing that we've got a very wide profile here. Projecting extreme volatility in the near term on the short term basis. And we've got unfair lows at 47.88 and unfair highs at 52.56. So, again, not a lot of reasons to throw darts at the board right now on crude oil. All right, let's go into the other product that this one has, gold is again, 1267, 1233, 1234 down here. There's nothing else to really talk about. That's kind of the neighborhood we talked about it possibly pulling back to, and it did. If we were not going to breach the 1267 area, I got stopped out of this. Don't mind saying that. It's a part of the game. And we always want to talk, and if you guys want to call in, we always want to talk about, something that I said that may or may not have worked out. I'd love to just kind of go through the process from an educational standpoint of how you deal with, winners and losers, because I'm going to show you guys some really cool automated strategies this week, and those completely rely on trying to have the best winning percentage it can, while at the same time risking 2 to make 1, or even more, risking 3 to make 1. And those are risking 1 to make 2, and possibly even risking 1 to make 3 or even higher. And that's kind of the way we try to run trading operations in general from our side on automated fashions or prop traders or whatever. But it's also just the plain, I think, investor way that you should be looking at that. So I hear you, Jay. And again, please stop me if I keep saying the same things over and over again. I'm just trying to give some words of possible wisdom here. We got to take a look at the dollar. We're just going to go through the usual suspects the first 15 minutes, and I got some stocks we need to take a look at that are possibly in play. Again, talked about hanging on, maybe put some trailing stops into this situation, and yeah, I don't see any reason to change tone here. One of the things that's lately driving the dollar, in addition to the euro having issues, is our treasury situation. So we're going to take a look at that really quick. And as we further, okay, just getting a text from somebody who's trying to deal with something for us on the background. Again, breaking down below 129.13, that kind of was the stop-oriented situation for me. This has been a trade that just has been the gift that kept on giving for a long time. And we talked about the next leg down might be a combination of 128.08 and 127.27. I know that's about a 10 or 12 tick span there, but we've reached a low of 128.04. We reached right into that DMZ. And again, as insane as it has seemed for quite a number of things, printing money, debt being crazy, a host of other factors, bonds and notes kept going up, rates kept going down, and as a trader, you can't try to outthink what's going on in the marketplace. We talk about that all the time, and continuing to buy treasuries has really been, again, whether that makes sense or not, fundamentally speaking, Tom has brought out some really good points about why these things continue to go up, and I'm aware of those. But until we're kind of starting to really show some long-term breakdowns, I think you just got to keep turning the wrench the same way. Even if the U.S. rate environment may be changing over the long haul, they're still sitting there on the edge of their seat ready to pull the trigger on any type of mechanism to not have the musical chairs game stop. I don't know how else to put that. But at the same time, looking at the dollar and why that may continue to move forward in the way it's moving forward is, now it's almost you start getting a kind of a double bang for your buck with the rate situation being held in dollars at the same time. So that's the situation on the dollar and the rates. And next week, guess what? We got to go into the world's favorite product to look at, the S&Ps. And we talked yesterday about the leverages with the long-term investor and the longs right now, and we've gone over this Brett thing till I'm blue in the face, but and basically the strategies that I'm going to show you this week are proof of concept based around breadth, and so you can see some data and maybe become aware of, from a historical standpoint, how powerful these numbers are actually. And as we look at these breadth numbers, we talked yesterday about me looking at things and from the opposite side of the fence and saying, if I'm short, how do I feel right now? I feel sick. I don't feel good. And if I'm long, I'm feeling pretty good. that's one way to look at it. There's 100 other ways to look at a trade, but as I look at the breadth and I look at the power of the internals, I know that there's not a lot of people freaking out on the stock scene right now, and there's also no disconnect, so to speak, between the leaders and the rest of the pack. And that means we've got a relatively consistent high breadth long side. Now, that being said, we always talk about how do we trade those numbers and how do we use that information to our advantage. The 2052, 2053 area now is going to be the springboard with stops oriented around there. And we talked about the 240s the other day and being able to leverage, again, trying to find support and not looking at this from the short side yet, and trying to buy, the 2039, 2040 met the targets at 52, 53, and now we may come back and retest 52. So that would be wishful thinking, and if it comes true, that's great. These markets don't go in a straight line up, and I was listening yesterday. I was like, oh God, we've had 2 days down in a row or 3 days down in a row. I mean, that's the kind of mentality that's out there right now, and people expect this market to go up. There's a lot of things globally that have, again, I know I'm kind of preaching to the choir here, that could have rattled this thing, especially lately. But when you stand back and look at it, I mean, we have compressed lower highs, higher lows, and now we're kind of getting out of that seam possibly, and you've got to play the odds here, and that's just the way the S&Ps go. So, all right, we're gonna grab a look at two currencies really quick, and then we're gonna come back after the break and get into something else. Euro. Not a lot to talk about there. Talked about that ad nauseum here. 114.47 is the stop-oriented situation on the long term on the euro. And you got new targets down below 112.45. Taking a look at the yen, man. I tell you what, I wish I'd loaded up more on this thing, but again, I hate doing that as a trader. We talked about this 116.67 area 68 as an area. This is the same thing as a dollar. And as crude oil was going down, we were like trying to find resistance areas to sell and breakout areas to sell. Just like the yen, this is the same, turn the wrench the same way, buy support, buy breakouts. Reached some targets already that we've been talking about, 119.55 yesterday, and now we're breaching above. So the thing is here is, you probably made 300 pips here really quick with zero pain, and now we're looking for a possible close above and pull back to that inflection point up top. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back here, and we're coming in with some Almond Brothers this morning. I hope everybody digs the Almond Brothers. Soft spot in my heart for those guys. All right, so we had a comment in the den here about the DAX possibly looking at this in the 30-year. You know, whenever somebody asks me about the DAX, or whenever I look at the DAX, I always remember back in I guess it was about 2000. You know, the DAX was actually even more, or I wouldn't call it illiquid now, but it was less liquid than it is now. And we had a couple of prop guys that just exclusively traded the DAX, and I was in the Chicago Board of Trade. It was floor number 12. We had about 12,000 square feet up there, and the rent was just, you know, it was different. It was before the 9/11 and all that, and it was just a lot of expensive overhead at that time. And I just remember that these guys, it would almost be like, oh man, they're trading the DAX, leave them alone, because it was such a tense situation, because the thing was, you know, like it is today, it flies around like there's no tomorrow. And but we were always like, oh, don't bother them, they're trading the DAX. And you know, we knew those guys were under a tremendous amount of stress, but they were day trading and scalping, and had a lot of weight on the trades, you know, in a very short amount of time, and we're taking scalping type points. Here's the DAX on the landscape view, and here's the inflection points to be aware of, and there's that 10,596 sitting there. And what I wanted to do here is go down and say 10,596. We talked about waiting for the DAX for a pullback. You can't just kind of continue to buy these things. And that was the ultimate pullback by support area, turn the rents the same way type situation. And what do you do now? So we're trading 107.24 right now, and don't see a lot of divergences here. Here's the that was the daily. Here's the intermediate. Here's the 240. Excuse me. And we had those inflection points line up in the same area, and that inflection point on the 240 is 10,601. So very similar situation. Got a little bit of a smaller box here. So again, what do you do now? If we get back into this 106.21 area down here, 106 general neighborhood, 105. What was that number on the daily? 105.96. You know, this to me would kind of say that we're not wanting to get away from that area. I wouldn't look at that as major support anymore. And I know we've kind of broken out in the last 8 to 12 hours above this short-term inflection point that the scanner gives you, 107.3650. You know, I'm a bigger fan on trading longer-term inflection points, and right now I don't see a lot of leverage here. I think that the DAX could continue to float up. So, I mean, put a gun to my head, put some trailing stops in, and hang tight on this thing. All-time stops need to be below 106 if you're trading this from any more than a day trading standpoint. All-time kind of intermediate stops need to be below 10 or 10,600. I don't know why I keep saying it the other way. You know, on a day trading standpoint, I just don't have a lot of information to give you that might be useful in this. I'm just kind of looking at this from a little bit different time frame. And sometimes I know the DAX floats around a lot. It's hard to sit on your hands and just, the hardest thing in the world is to watch the screen and do nothing to me. I mean, it's just, I mean, I prove that all the time and get myself into little situations sometimes just to have stress in my life, I think. And that's a whole nother, that's a psychological conference that we could have about that. But right now, that's the situation on the DAX. So let me move on. Here we go. Let's take a look at the 30-year. If I can find it. Here we go. All right, March contract still in this. Very similar to the 10-year, kind of had that breakdown, closed below early, and 149.04. So right now in the 30-year, there's nothing down here. And on the weekly, there's something considerably lower for support situation. Again, I'm not a big fan of just piling into the shorts on this yet. And if you think about it, if you step back and think about the rhetoric of the Fed, let's go to our next break, and then I'll come back and we'll discuss the treasuries and the possible moves of the 10-year and the 30-year. Be right back. Go on, my brothers.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Thanks, guys. I'm sorry, I'm clicking off the latest Viagra ads off the email pop-up here that somehow, I wonder if that's a sign. But anyway, here we go. Here's the 30-year. Here's the weekly. And we've got a profile here this week. I've got a bug on my computer. Okay, maybe I do have a bug on my computer. Here we go. Got a new profile that's appeared this week, and the 30-year kind of dissertation is real simple. Previous unfair highs are 145.01, and current unfair lows are 144.08. So that's kind of the next dig-in area for longs. And right now, we had talked previously about the 149.04 kind of, support area here. And I'm just trying to read all these things coming at me at the same time here. 149.04 is kind of the support area and the stop-oriented area, if you will. And I'm not a big fan of going short these things yet. I think that's a super low probability trade still at this point. If you step back, and what we were talking about before the break is if you just kind of get away from, the charts for a second and think about, what has transpired here with the Fed, and you can read all the articles in the world and, try to, guess what they're going to do moving forward. These notes and bonds should be selling off a lot harder than they are. And regardless of whether there's a bid in the marketplace by the Federal Reserve or whoever's doing that, the Plunge Protection Agency. I heard that one the other day too. But the fact of the matter is these things have barely come off all-time highs. All right. And the long trade may still be on. There's no reason to be the hero. We talk about this all the time of going in and trying to pick the top or bottom of a long-term move. That's a very dangerous game to play. So right now, I'm still looking at this as long-term, still trying to buy support here. Yeah, plunge protection team. That's maybe look that up. I'm not exactly too deeply educated on that one, but I heard that the other day. Anyway, so that's the situation on the 30-year. What else was thrown out there? Okay, so we talked about the DAX, talked about 30-year. I think we've covered all the usual suspects that people usually have questions about, but I want to pull up some things that have and haven't worked out here that we've talked about in the past. So if you guys have been following, you know how to deal with this a little bit. Got it. Let's see here. Okay, here we go. XLE. Even with crude oil doing what it's doing, I mean, we talked about this is the less riskier trade, and we talked about meeting some targets up top around 80.07. Yes, let's see. Let's just pull up the daily so we can see this a little bit better. Yesterday had a pretty violent move down, and then we kind of ratcheted back up, and this to me, again, having a close above 80 is going to be super important for the XLE, but kind of looking in retrospect, it's trading 79.52 pre-market, but as crude oil pulls back from, what was it, at 53 or so, 53 and a half, back into 49, I mean, we pulled back $4, so in reality, that's what is that, 8, whatever, ballpark 8% move down. XLE is kind of sitting on the bid still, so again, I just wanted you to see how this kind of worked out, as this was the least painful way to probably trade crude oil, and what's it going to do now? That's kind of always the question that I like to finish with. I think you still got, and this is our 240. I think you still got a chance with crude oil possibly showing some strength at some point for the XLE to pop up again. And I know we pulled back into that. What was the low yesterday? 78.41. Not a big deal when you're looking at this from a long-term standpoint, and the launching pad at 74. So again, what do you do now? I think you sit tight with this. We definitely reached some targets at 80. I took off half of what I was dealing with there, and then kind of turned the other half into a free trade. That's a whole position sizing symposium we could have on how to position size things. But again, looking at the daily situation, I'm still a big fan of sitting tight with the rest of it, seeing if we can pop above 80 and start squeezing some people. And obviously crude oil would have to help that, but it's kind of a nice little relative strength trade going on here. I'm just trying to look through some of the comments here, see if I missed anything. All right, XLF. This one, obviously, the stops in my book were oriented around. I got stopped out of some of it around. What was that? 2370? Was that 2367 into 2394? Right. So that's the situation in the XLF, and that's kind of where I got stopped out of the short situation. Now I'm just sitting tight because you really don't have leverage up here. And again, we talked about getting stopped out of this, and it's not time, in my opinion, to peel into the short trade again. With the rate environment hinting, if you think about it too, the rate environment hinting that it is the yield curve may be widening. In my opinion, these things should be popping more than they are. So again, if the notes and the bonds start rallying again, these things may just decide to give it up quickly, and you've got some opportunities getting back down below that inflection point around the 24 area. And let's see here, just to point out some numbers. Where's my 2451, 2367 on the bottom, and then this week's that same neighborhood up top. So you got some resistance up there, 2447, 2450, 2467, and those are the ones to pay attention to up top for selling the resistance or selling the breakout down below, getting back into the fair auction below 2394. All right, so we covered those. Now we got to look at Coca-Cola. Some of these stocks that are in the news. Obviously, Coke, a little bit better news in general. 4105, obviously the support area. If you look at these, this is our weekly profiles on Coke, but let's just take a look at this. Gapped up, obviously, and sold down into that daily info high 42.33. So there's a lot of things to think about here. We're trading 42.40 pre-market. Obviously, this is broken stride and got back above profiles here, sold off. That action wasn't the best action in the world there, but let's just think about it. I mean, the S&Ps, seemingly the rest of the market, may just kind of rising tides lifts all boats, as somebody told me recently. That may actually be a factor in this. And your own support around 42.33. So I would consider this, and we can go into our scanner and find these types of setups. And I should actually do this for you. Let's just look. Let's get rid of that. Let's pull up the S&P 500. And as this loads, now we got the S&P 500 up. And what I want to do here is go down into our daily and things that are trading top of the box and matching results. Coke should be in this list. There we go. KO sitting right there. And again, these are some really good stocks to kind of put on your radar screen, just doing this simple sort. And by the way, you guys all have access to the Brett charts now, who've got this through TFNN. And again, here's the S&P 500 just to show you in a Boston type tone how wicked this is from the long side. And here's the daily situation, which has now coincided with it. And it's going to be really cool. I'm going to be able to kind of show you guys some reports along with the paragraphs that are coming on in the the stock charts that are going to be on here. I'm going to be able to show you some reports involving some back testing of the breadth, either alone or with some other strategies. So again, the dailies have kind of crossed back over positive since February 2nd, and unfortunate for the shorts here. But that's the situation on Coca-Cola. And we got to look at PepsiCo because that's also earnings. Here's the lid on PepsiCo for right now, 99.61. But again, things on their highs want to go higher, and that's going to be kind of take off half the position situation. You've got 96.82 that we broke out above, and now what do you do now? Because we always talk about possibly waiting until we get through. We're trading 100.30 pre-market. We've been as high as 101.50, so we're actually sitting above weekly inflection points. This weekly bar on these signals not reflecting this right now, unfortunately. But right now we're sitting above here, and considering that my feelings on the marketplace in general, if we can get a pullback to 2052, that would be a great high probability setup for longs in the market in general. Coca-Cola may coincidentally come down into this area, and Coke is, multinational, blah, 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 has really weathered the dollar storm very well. And, you got to take that into consideration, too, that if the dollar ever does pull back, I'm sorry, this is PepsiCo. If the dollar ever does pull back, then we're going to have possibly even more of a ratcheting situation up. What's amazing is you go anywhere on the planet, and it's Pepsi or Coke still. I mean, it's just, I'm in the darkest corner of, a third world island in Asia somewhere, and you can get a Pepsi or a Coke. I mean, it is literally amazing. Amazing. I mean, and there's a Coca-Cola plant or a PepsiCo plant in the middle of a cane field everywhere you go. I mean, it's just make it cheap. There's the sugar. And, if you guys hadn't had a sugar-populated Coke or Pepsi in a long time, go get one. This high fructose corn syrup version is a little lesser of a situation. All right, so, again, not meaning to get too far off here. I want to look at GoPro. GPRO. All right, so here's the weekly. Again, we haven't there's a little bit of excitement again on this thing, but we haven't had enough history here to build profiles. So we've got one little profile here we're looking at. The stock opened back in June or July, public, and 54.33. We talked about that being the resistance area on this, but again, what do you do now? This thing's continued to drift down, and right now you got even a better point that we looked at recently on this profile here, 46.99. Let's just call it 47. That broke down. And again, orienting battles around this, either support or resistance, as you look at this, it's just a great place to wait patiently. And right now you've got that. And I guess to sum up what I'm trying to say here is, if you're long, you've got not a lot of reasons to hang on to this at this stage. And the only reason, in my opinion, that you'd have to get back in this is we could get back above 47 and close above 47. Now, we may have some this thing may drift lower, and by all things that we've been looking at, market showing some strength again, relevance, blah, 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 NASDAQ, all things considered, this thing should not be trailing down. And even though that's the case, we may have some new inflection points to pay attention to down here at some point, which may give you, it may give you reasons to double down on this thing. And I'm not advising for that ever. So right now, my take on it is, you probably should just wait patiently. If you try to pick some battles around 47, or you're in this long, what are you doing here? You're giving away a couple of points. If it goes back into 47 or above 47, you're basically getting rid of a 3 or 4 point spread there. But the downside is possibly huge. I mean, there's other people getting into this marketplace, and there's already other people in this marketplace. And in my opinion, this thing is a little bit overvalued. So this thing could actually drift down into 20 easily over time. And, it might be time to just sit tight and not be in the market on GoPro right now. I had a lot of people call me about this, and that's why I brought it up, because some of these folks are stuck in this thing from a lot higher. All right, let's take a look at the NASDAQ really quick and some levels. All right, this is a little bit more relative strength situation. 42.10 got a big powerful move yesterday. Don't have to tell you that. But what do we do now? I think that the long trade is still apparent here. This, after that move up yesterday, this is kind of almost a gathering situation and consolidation situation. This is not what you want to see if you're short. This is usually indicative, historically and statistically speaking, of another leg up. So just be aware of that. We will be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back. And what were we looking at before? Okay, Lowe's. Sorry, looked at a million things on another screen here. So guys were asking about this new profile appearing today, and let's see where we're at pre-market here. Looks like 7180. All right, so had a good run with this, had another breakout, had a support little. I mean, this has been clockwork. Support situations even when the market pulls back, and this has been a relatively strong stock in a sideways market since what was that, September, October? Let me pull that up here just to verify because I'm too smart to remember. February. Okay, so good Lord, back in October. So we've kind of been sitting in a range since October. On a long-term scale, that's good for the longs, and we've been talking about buying the support areas in general. But as you look at Lowe's Corp, what do you do now? New profile appearing, and we actually traded within that profile yesterday, and we're in the profile. So right now, the market could drag this up. Don't see a lot of downside risk with this particular company, especially where it's at, fundamentally speaking, right now. Again, so what do you do now? If you're in it, I would continue to stay in it, put some trailing stops in. This profile is going to be pretty important in this Maginot line here around 7164. I put it this way. I think you block out the short side of the market on this. And if you're not in this stock, believe it or not, And when I look at these things, I always go, let me buy this. I'll put an end to this rally. And you could be the high print on situations like this, but again, it's a strong situation in a market that's gone sideways. It's proved itself buying support the whole time, turning rents the same way. Again, this is one of those things that things on their highs go higher. So that's the way I'm looking at this. Had a couple of calls about that. Okay, I want to look at this one too. And I'm pulling these right off the scanner, guys. Just some situations where we're kind of gravitating. Again, LL. I like this particular company. I like this action here. Here's the unfair highs, 128.58. Again, this is the weekly situation on LL. This is one of those stocks that's just continued to go higher, and for lack of a better way of putting it, people want to own it right now, and you've got a new inflection point here. We're trading 128.73 pre-market. If we get some market pullbacks into 2052, this thing may just sit on the bid here, looking very launching paddish to me. So I had a couple of calls about that, and people are actually using the scanner. And what do you think about this? This has kind of been on the radar screen from the filters, blah, blah, blah. Let's take a look at Yum Brands. This is a recent in the news situation. And here we go. And let me just kind of go back into the 240s here really quick. Okay, so, what do you do with this now? Again, I think the market's going to go higher, and this could drag this particular thing up. You've got a decent leverage point here now at 73.99, 74. Again, has weathered the storm a little bit with the dollar relatively well recently. In fact, here's the weekly. Not a lot, and I've got only 300 days back here, so I'm not going to build too many profiles. But on a long-term basis, you're relatively safe. Long-term stops below 69.24, but I think you got another little launching pad leverage point around 74 here to move higher, and the market could drag this up. Not a long-term investment. Guys, thank you very much. Steve Rhodes is next. He is always good. Please listen to him. We'll be back tomorrow. I'll be on Tom's show later today, I believe.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.